Two companies are fighting a $150 billion war over your waistline. Should they also fight for a spot in your investing portfolio? On the one hand, we have Novo Nordisk, the Danish king behind Ozempic and Wegovy. And on the other hand, we have Eli Lilly, the trillion-dollar monster behind Mounjaro and Zepbound. Now, these companies are fighting over obesity medication. And analysts expect this entire market to grow to $150 billion over the next decade. Now we're going to take a look at these companies in depth. Welcome to Market Daddy, the channel for busy retail investors looking to invest for their future fortune without having to turn into full-time day traders. My name is Diederik. I'm a value investor, contrarian thinker, a recovering spreadsheet addict, and a co-founder of MarketDaddy.ai, our AI stock analyzer tool that takes all the fundamentals and turns it into one clean dashboard. So you don't have to have 15 browser tabs open, read through all the SEC filings, and be on time for every earnings call. We do the hefty lifting for you. Now, quick disclaimer, this is not any buy or sell advice. I'm not your financial advisor. I'm just showing you how I do my stock research. You still have to do the research on your own. I'm just sharing how I do mine. Let me set the stage. The global obesity market is growing. It's booming. And there's one reason for it. There's more and more fat people. The World Health Organization thinks almost 2 billion people could be living with obesity by 2030. And it just released its first official guideline backing GLP-1 medication, like semaglutide and tirzepatide, as part of long-term obesity treatment. These drugs started out as diabetes treatments. Now they're being used to help people get rid of 15 to 20% of their body fat, lower blood sugar, and reduce the risk of things like heart disease. On the business side, analysts at big banks, places like Morgan Stanley, BMO, and others are now forecasting that the entire obesity and weight loss market could grow into a $150 billion industry by the early to mid 2030s. And right now, the market is being divided up by two of the biggest players, Novo Nordisk and Eli Lilly. Together, they have a monopoly on the entire weight loss and obesity treatment industry. And your job as an investor is to decide which one to invest in or not to invest in any at all. There's always the option to walk away if you're not morbidly obese. Let's start off by looking at Novo Nordisk. They're the Danish king of insulin, and they've been around since forever. Even when your grandpa was very young, they've been making insulin. Now their GLP-1 empire exploded in 2024, and this is reflected in the stock chart. You can see it rising up very steadily. Now, since they've peaked around midway in 2024, they've had bad news on bad news on bad news. They expect slower growth. They've had price cuts in the US, which is their biggest market, and their hope is that they can offset the price cuts by increasing the volume and the amount that they're selling. Now, they have also a big risk of competition. Eli Lilly with their mainline brands, but also smaller companies trying to imitate what Novo Nordisk does and taking away market share from their huge GLP-1 empire. Now, when looking at any company, if we really want to understand it, we always ask ourselves three basic questions. Is it a great business? Can we reliably predict it for the future? And can we buy it at a great price? First off, we're going to start looking at, is this a great business? And we want to start off by understanding, what do they actually do? Well, we all know they make Ozempic and Wegovy, and those are two mainline brands where Ozempic is more focused for diabetes patients, Wegovy is more focused on obesity and weight loss patients and treatments. Both of these are injection-based. From a patient perspective, this is way less nice than taking an oral drug, which Eli Lilly already has and is very competitive with. Novo Nordisk is developing their own oral medication, but it is still in phase 2 trials, and they need to complete the next set of trials to become FDA approved, or after that they can become FDA approved and they can sell the drug to the big US market and actually make money of it. Right now, it's still not here and it can't be counted towards revenue. Now, that's what they do, but now we want to go a step further. What are the numbers telling us, and can we quantify Novo Nordisk as a great business? And to do this, we'll be using our software. We have our own dashboard, and we can quickly identify if they're a great business. Now, what does it mean to be a great business? I want to see two things. I want to see growth, and I want to see stability. If you combine those, stable growth. Now, what does that actually mean? If you want more perspective on how management looks at this and what the business actually does and what they quantify as risks, you can find this in our due diligence. This is taken from the earnings reports and the SEC filings, and it's a nice and compact summary. I'm not going to read this out now. You can sign up to Market Daddy for free, try it out for 7 days, read through this yourself. No credit card or payment information needed, and you can cancel anytime. I want to look at the charts. I like looking at this, and here I want to see stable growth and revenue growth. Absolutely amazing. They're doing well. Same for net income. Free cash flow is growing growth as well. But there's a slight crack. We can see that last year, or the year-on-year change, is minus 0.5%. So their significant growth that they've achieved here over the last few years is starting to taper off. If we look at their operating cash flow, they're doing well. Return on invested capital. This is something that I'm always very interested in, because this tells me how well are they going to invest the money that I'm going to invest in their business. For 2024, they did 76% return on invested capital. Now, I always aim for 15%. That means you're still beating market average of around 10%. They can do it at 76%. That's amazing. This means they completely beat my investing strategy, and therefore I'm happy to give them my cash. If they are stable, and if they can grow, and if I can buy them for a great price and reliably predict them for the future. Now, their operating margins are trending downwards. They're still great at 44%, but they're trending downwards. Free cash flow margin, barely any growth. It is stable. It ranges from 30 to 29, so it's not massive instability, but we would like to see some growth there and some more stability, even though it's still great. Cash to debt is actually declining. I would like to have a ratio of above 1. We can see that for 2024, it's below 1. I'm okay with them spending cash on developing new medication, especially if they can invest it at a return on invested capital of 76%. They should reinvest all their cash at this percentage, but you also want them to have some cash for whenever there is bad weather, when there is bad market conditions, when there is, as a business, there's always some level of risk with operating a business. And the best way to mitigate risk is to have cash on hand. They're decreasing their cash position, probably to develop more drugs, or most likely to develop more drugs. They also need to do that, but ideally I would want them to have both. So yeah, they're decreasing their cash position. They can invest it at a great return. So far, I'm okay with it. But I would like to see this trend reversed. Shares declining, always great to see as a shareholder of the business, and their book value is increasing. Their charts are actually looking really, really good. There's some cracks here and there, but overall, it's shaping up to be a great picture. Now, next up, I also want to look at their operating margins. How efficient are they as a business? Now, here we can already see their 2025 number for the return on invested capital, which is already decreased, 39%, which is half of what we saw, but still amazing. But I want to dive into the margins. A great gross margin of 85%, operating margin of about 44%, and a net margin of, rounded up, 35%. Great. That means that from every dollar they make, they get to keep 35 cents. They can reinvest it at a great return on invested capital, and they can keep compounding your investment, your worth. They can create more shareholder value for you. They can develop more drugs, they can deliver more value to other patients. But from a business perspective and a business owner's perspective, which you are as an investor, this is really, really great. Now, do they have any dividend? Yes, they have a small dividend, around 1.6%, very sustainable. It's not going to make or break my investment in Novo Nordisk, but they pay it, which is nice to see, but it's a manageable level of dividend that they're turning out. Now, overall, the picture I'm getting from Novo Nordisk is that it's absolutely a great business. Some cracks are starting to show. I would like to see them increase their free cash flow, reverse the trend of downwards growth or decreasing free cash flow, and I would like to them for this ratio to reverse and for them to start increasing their cash to that position. So great business, some things to be mindful of. Now, we've decided that Novo Nordisk is a great business by looking at the details. But as you can already see over here on the dashboard, we do a lot of evaluation based on value investor methods. How would Warren Buffett or Peter Lynch look at any investment? And would they think it's a great business? Would they think they can reliably predict it for the future? And do they think they can buy it for a great price? Now, as you can see, according to all those values, it already passes as a great business. They also think it can be reliably predicted for the future based on their compounding ability. We saw they had great return on invested capital, they had great margins, lots of cash to play with. So I would also agree there. What we do see is that can we buy it for a great price needs work. Now, do we agree with this or not? Let's dive into our valuation lab. Everybody always asks me, what is it worth? And that's why we created the valuation lab. Here you can play around with the numbers and you can see what if the business continues growing? What if they grow even faster? What if they experience bad market conditions? What should I pay now to make sure that I get my desired return over the next couple of years? That's where we have our valuation lab, and let's fill in some numbers and see what is a great valuation for Novo Nordisk, and can we currently buy it at a great price? Yes or no? Let's find out. The way our valuation lab works is you get given 3 scenarios. You can fill them out however you like, and then we come up with a valuation. Now, based on business record and getting market average returns, which is 10%, it is currently greatly undervalued, and there's a huge upside potential in Novo Nordisk. But let's take a closer look, because it's not realistic that the business is going to be run exactly as great as it has been run in the past. As we see, there's already some cracks starting to show for the future of Novo Nordisk. So let's see how can we properly value this company based on what we know today. Now, if the business continues to grow at about 25%, I would be willing to pay a little bit of a... No, let's be a little bit more conservative. Let's also say we're only willing to pay a 25 exit multiple. Let's say they grow about in line 15%. I would be willing to pay 15% exit multiple. Now for required return, I always fill in 15%. As I've said before, I like a 50% return on any investment I make. So let's use that for all scenarios. Even when there is a bad scenario, I still want to make 15%. When there's a great scenario, I also want to make 15%. I want to make 15% regardless. Now let's say there's also a bad scenario. Now I don't see this as extremely likely, because my bet is there will be more and more fat people around and Novo Nordisk is ready to serve them. So for my bad scenario, I only expect 10% growth for the next 10 years. Let's say we only pay an exit multiple of 10. Let's base it on free cash flow. And we still have a great upside potential of about 50%. As you can see, we basically value this at around 500 Danish kroner, whatever US dollars that may be, and it's currently only 315. This means there's a huge upside. You're only paying 315 for what is potentially worth about 500. Now that's a massive upside. Now again, this is not any investment advice. Do your own research, see if this fits your portfolio, if you agree with my scenarios. And to do this, you can head over to our website. I've said this enough times already. Sign up, try it out yourself, play with any scenario and see what valuations you can come up with. But if we go back to the top, it's a great business. We can reliably predict it for the future. Even though our filter says it's not a great price, I think it is. They can still grow really far into the future. They have a great runway. I think the entire obesity and GLP-1 market is absolutely on a tear. It's only going to grow from here basically because there is more and more fat people, so they're going to make more and more money of all the fat people around. And the reason why I think it currently does not get a pass is because you're paying a premium, but I'm okay with paying a premium because the Novo Nordisk has more growth than the premium you're paying. So that's my investment theory based on Novo Nordisk. And once again, do your own research. But Novo Nordisk, absolutely looking amazing. Now we want to compare it to Eli Lilly. How do they hold up? Next up, Eli Lilly. They're similar in a way to Novo Nordisk that they both have diabetes and obesity medication. They have Mounjaro for the diabetes part and Zepbound for obesity. They are the first drug manufacturing company that reached $1 trillion valuation. This has only been reserved for the big tech companies, but Eli Lilly has reached this major milestone. Now, where they differ is that Novo Nordisk has been around creating insulin and diabetes medication in forever. Eli Lilly comes from Prozac, which is antidepressant medication. Eli Lilly is also, their drug is newer, where Novo Nordisk had the first mover advantage with their GLP-1 medication. Eli Lilly has last mover's advantage. They have the newest drug, it's really effective, it's also widely available, and they are a little bit further along in their study for oral GLP-1 medication, which from a patient perspective, again, is a massive, massive upside. Now, it's not yet being sold, but it's closer to being sold than Novo Nordisk variant. So very interesting how that head-to-head is turning to how that will shape out. Now, back to the valuation perspective. It signals two things. There is a huge growth story here. You can see that they've absolutely started a massive climb to the top, but it also signifies that they are very, very highly valued. So once again, we ask ourselves the three basic questions. Is it a great business? Can we buy it for a great price? And can we reliably predict it for the future? Now, when asking ourselves if this is a great business, we want to see the same things. Are they stable and are they growing? Now, when we look at our checks, none of these are already met, which is very different to Novo Nordisk. Novo Nordisk was already a great business and it could reliably predict it for the future. Now, how does Eli Lilly differ? And do we agree, or do we find that there is more that meets the eye? Let's take a look. Again, we can look into the filings. You can read those yourself over at marketdaddy.ai, but let's first look over the three key insights here. Maybe we can already learn something there. Lilly's Mounjaro is market leader, driving significant revenue growth. That's what we expected. They are heavily investing in R&D, indicating a commitment to innovation. No, that's great to see. Let's see if they can match Novo Nordisk return on invested capital. And management raised guidance shows confidence in overcoming pricing pressure and regulatory challenges. Now, this is very similar to what Novo Nordisk is facing. They are also having to cut prices, and they're hoping to offset this by selling more overall medication. Apparently, Eli Lilly is suffering the same. Now, if we take a look at all of the charts, we see there's significant revenue growth and it looks very stable. Their net income is a little bit less stable, but it is growing. And their free cash flow is, it's actually on a big downward trend. Novo Nordisk was starting to trend downwards, but they've been on a big upward increase. Eli Lilly is already looking a little less stable. If we look at operating cash flow, we also already see that falling off a little bit, but it's still really, really high. Return on invested capital, significantly lower than Novo Nordisk. They were sitting around 70% to 40%. Eli Lilly for 2024 is sitting at 11.3%. Now, this is not poor at all. It's okay, but I'm aiming at 15%. They're not matching this, so I'm outperforming Eli Lilly. Therefore, I'm already doubting about whether or not I'm willing to give them my cash. So return on invested capital, not looking amazing. Operating profit, sitting around 40%, is doing great and it's trending upwards. Free cash flow margin, it's stable, it's not growing, and it's very, very minimal. Cash to debt also increasing. They're reinvesting in their R&D compartment. They're researching new drugs. That's what we like to see. They're still sitting above 1. But they can't reinvest it at the same great returns that Novo Nordisk is doing. However, they're still above 1, so it sets them up for bad weather, for bad business scenarios. So from a safety perspective, that's looking great. Debt to equity, there was a big spike upwards, downwards, relatively stable. They're decreasing the amount of shares, although we see a small increase. 0.1%, but over 10 years, it's decreasing. Only last year they handed out a little bit more. Meh, book value, not on a significant growth curve. Already, I think it's a little bit more of a mixed bag looking at it from what the business is actually doing, what's actually happening behind the fancy story of Eli Lilly. It's looking like a less great company than Novo Nordisk. Now, if we look at the margins, the same way that we did for Novo Nordisk, what are we seeing here? Their gross margin relatively in line. Novo was doing about big numbers in the 80%, in that range, so somewhat around there. Operating margin sits around 40%. Net margin is about 10% lower. They're only sitting about 23.5%. Novo was sitting about 35%, so that's significantly lower. It's not bad by any standards, but it is lower. Is it a great business? Yes. Do they have a dividend? A smaller dividend than Novo Nordisk paid out, but they can pay it out very sustainable. So you're getting a dividend. It's not massive. From a margin perspective, it's all in the green. It's all looking good, but it's not looking as good as Novo Nordisk. So from a business perspective, it's great. From a comparative perspective to Novo Nordisk, it's less great than Novo Nordisk showed. We see the big one, a lower return on invested capital, and it's actually declining. We see worse margins, even though they're great, they're still worse than Novo Nordisk's. And we see them being less stable. There's more variability in most of the graphs. So great business, less great than Novo Nordisk. Now, next up, can we reliably predict Eli Lilly for the future? And what does it mean to be able to reliably predict something for the future? Well, you want to look at a few things. First, we want to look at the market they're currently operating in, which is the drug market, but more specifically the GLP-1 and the weight loss reduction market. This is still a growing market. We can relatively reliably predict it. As we stated in the beginning of the video, we expect it to grow to a $150 billion industry in the early or mid 2030s. Absolutely amazing. Next up, we want to look, can we reliably predict the business? Now, we saw that from a margin perspective, they're doing great. They have lots of cash on hand to be able to deal with any bad situations happening in the near future. Now, there is some risk from policy change. There's some risk from competitors trying to reproduce what Eli Lilly and Novo Nordisk have created, but I think that's relatively small. It's really hard to enter the space to get FDA approval, so Eli Lilly is very well set up to deal with that. I don't think that's the greatest risk for them right now. This could turn out to be a bad take, but I think right now they're doing great. But if we look at them, if we look a little closer, if we look at their valuation, if we look at their return on invested capital, they're currently valued as a tech business. Now, tech is a lot easier to develop, a lot more predictable. I'm not saying it's easy, but it's a lot easier, a lot more predictable than it is to develop drugs and medication. There's always an element of randomness in there. And I think that's inherently makes it hard to predict. And especially at these high valuations, I think their valuation is only going to come down from here. Now, they could grow for a few more weeks, a few more months, but I think over the long run, it's really hard to keep this valuation, to keep growing at the same pace they've grown, and to justify this high multiple that you're paying for it. And this is a great way, or a great segue to our next question: can we buy it for a great price? Now, I already hinted that the valuation is really high, but let's dive into our valuation lab and see if we agree or disagree with the boss here. First up, best case, let's say they grow in line what we did with Novo Nordisk, which was about 25%. Now, I'm not willing to pay a tech multiple for this. I'm only going to pay 25 as an exit multiple, same as Novo Nordisk. Now, let's say they do about 15. No, let's do the same numbers as we did for Novo Nordisk. We still think the market is growing. So even in a bad case scenario, we think we're going to see revenue growth of at least 10%. And let's see, with the same numbers that Novo Nordisk is going to do, what Eli Lilly is going to do. You're currently paying $1,000, and based on our scenarios and the blended value, we only think it's worth about $260. That means it's hugely overvalued. Now let's see if we can be a little bit more in favor of Eli Lilly. Let's say we think it can even grow 30% we're willing to pay an exit multiple of 30. We also think that their revenue growth in the base case is higher by 20. And we think even in the worst case, they're going to make 15% year-on-year growth. And we're going to base it on free cash flow. We're going to run the valuation again. Even with increasing the numbers in every scenario, we're going to see a valuation for what you should pay for today if you want to make a 15% return based on the blended expectations of all three scenarios. It's only worth today $492. Well, it's priced today at over 1,000. So there's a huge downside. It's almost double the price. So no, you can't buy it for a great price. If we go back to the checks, there's a lot of work that needs to be done here. Yes, it's a great business, but not as great as Novo Nordisk. Can we reliably predict it for the future? Yes, and in this regard, it's relatively similar to Novo Nordisk. Can we buy it for a great price? I currently think you can't buy it for a great price at all. Now, you can do your own research. You can go to our software. You can fill in your own numbers and see what kind of value you can put on Eli Lilly. Now, you could have made a lot of money on this if you bought it in 2022, but we're not living in 2022. So currently, there's a lot of hype in Eli Lilly, and I don't think that the numbers justify that hype. For Novo Nordisk, I think you can buy it for a great price. I think it is a great business, and I think you can reliably predict it for the future. So if we put them head-to-head in a straight competition, Novo Nordisk comes out on top, no questions asked. Now, if you want to dive deeper into the numbers, we created the software for busy retail investors who don't want to be full-time day traders. We created our stock analyzer tool to create one single dashboard. You can just type in any stock you want and see all the information you need. You don't need to file through all the SEC filings. You don't need to set a calendar reminder for every earnings report. You're up to date at any point in time. Now you can use our company snapshots. We have created our own watch list model where you can see all of the stocks that you're interested in with all the important metrics you need to know about. And we've also included a screener where you can fill in different scenarios and see which kind of companies fit your scenario. So go check it out over at marketdaddy.ai. You can try it for free for 7 days, no payment or credit card information needed at all, and you can cancel anytime. Be sure to like and subscribe, and we'll see you in the next video.